Hello and welcome to the Stock Planner channel. Artificial intelligence. That's what we're talking about today. Remember, this is an education channel. Remember to like and subscribe. Do your own due diligence because nobody's advising on anything. In fact, never take advice from anybody on the internet. Let's get started. Looking at AI or AIC3, it's a artificial intelligence technology company. I'm looking at daily time frame on TradingView. And you see that this stock has been trending basically down. It does swing a little bit, but its overall trend is down. Let's expand out a little bit. This stock was at $76 back in June, and now it's at $49. That is a big drop. Something's happening with this company. The indicators I'm using here are the zigzag. There's the top, and hopefully we would enter it there. That's right after earnings. And what I like to do is I like to have my MACD, zero line lag MACD, to be deep in the money, deep above the zero line. Stochastic RSI to go above the 80 and come back around. And the RSI to go above the 70 and come back around. It has done that right here. And those three indicators occurring within a couple days of each other would have predicted this down slide. This is a MACD way below the zero line that's waiting for it to go up. This is a single here to go up, and this is a single. All these occurred to 3 or 4 days of each other, and in fact it did go up, but only for a little bit. This would have been a loser. Now we have a situation where the MACD is slightly above the zero. I like it a little deeper, but the rule is the rule, and I have a single that was generated based on the fact that the MACD is above the zero line. The stochastic RSI has come around, and the RSI has come around from the top to the bottom. And it all occurred within 2 or 3 days of each other. It's a down single. This is zigzag. It does not know what it's doing. It's a down single. So what to do here? I think this is all consolidation. I think the stock is sick, and that probably this stock will trade for between $60 and $40 for the next month or two. 60 and 40. Range bound. Let's do a little further investigation of this stock and see what we know about its fundamentals. Well, I know we're swing traders and we like technicals and numbers. I'm a computer guy and I love numbers and things I can see and program in. And this going short was programmed in, but I don't know if it's a strong short. So let's look at the fundamentals and see if that gives us a better clue what's going on with this stock. Looking at FinViz, I'm using the free version. The paid version is not expensive and it's kind of robust. You get some day quotes and stuff. As a swing trader though, the daily chart looks just good enough for me. And look, we had that top and now it's ranging down below here. FinViz does not have a target price. It is optionable and shortable. We like that. And it has a recommendation of slightly short, and it's not profitable. Nothing recent here on the upgrade downgrades. TipRanks is forecasting this to go 101. Wow. It's got 7 analysts. At least one of them is predicting a $62 low. One's 167. The average is 101. Wow. And they have it as a moderate buy, but this has got a very low ranking. And the insiders sold shares. Earnings is August 31st. Financials are in the wrong direction. Typically, I do not like to play this so close to earnings. So I'll have to remember that, August 31st. So C3 AI is artificial intelligence and it operates all over the world. Its revenue is expected to grow by 26%. And it grew by 16 or 17% over last year. That's good. Earnings are expected to decline over the next 3 years. That's not good for an AI type company. Significant insider selling over the past 3 months. That's not good. It says it's undervalued, but all these little X's, not a lot of data. Future growth looks good. Earnings growth does not look good. Revenue does look good. Revenue and earnings, well, that's mixed results there. Past performance. Everybody in this industry is going up. None of this looks good. I see too much red. Let's see if we can find something that trades between 55 and 40, or 60 and 40. Looking at an iron butterfly, the max loss is 1,600 and our net credit is 870. It just seems too expensive to me to make this play, but it meets our break-evens between 40 and 60. So as long as it stays between 40 and 60 by September 17th, that's kind of cool. Let's see what October 15th, even more. This is about a 1-for-1 now. Well, not a 1-for-1, but 1 to 1.5. But hey, this is a little better. It's still too costly. Let's just take a look at one more thing. Generally, we think we're going to be short. Fair call spread, you get a credit, and we want to be below 60. $85, so you have to put up $500. That's about 18%. We have the earnings in 10 days. This is doable, but I think what I'll do here is wait to after earnings and look at this trade one more time again. Waiting to after earnings. I do think it's consolidating. We have the earnings coming up. I think it's going to trade between 60 and 40. I didn't want to risk $1,000 to make this play, even though I think it's relatively safe. Maybe you do. Maybe you don't. Let me know what you think below. Anyway, I'm going to wait till after earnings and take a second look at this again. Waiting. Please like, subscribe. Let me know what you think of this trade. Catch you in the flip.